Hey, what's going on YouTube? Randall Cornett here, coming at you guys with a new quick video. There's a lot of good stuff to cover today. I'm going to try and jump right into it for you guys. Starting off, we have the Sunshine Act meeting, which is the closed door SEC meeting. This is taking place tomorrow at 2 p.m. I wanted to highlight it's a closed door, so we're not going to be able to watch this, unfortunately. But I think that hopefully we'll be able to see how it impacts the market. The subject matter, I went ahead and highlighted for you guys. So I'm just going to read it word for word. The subject matter of the closed meeting will consist of the following topics: institution and settlement of injunctive actions, institution and settlement of administrative proceedings, resolution of litigation claims, and other matters relating to examinations and enforcement proceedings. So for those smooth brain apes that don't know what injunctive actions are, I went ahead and pulled that up for you guys as well. An injunction is a court order requiring a person to do or cease doing a specific action. So it can take place, it could be a person or a company in this case, right? So it's restricting them from committing certain actions. So the fact that the meeting is basically around that is a huge thing for us. I'm expecting that to be to our benefit, right? They're talking about resolution of litigation claims and relating to examinations of enforcement proceedings. So the big question a lot of us have had, right, is are like rules are rules and a lot of people break rules, right? How are they going to enforce it? So it looks to me like that's what they're kind of discussing here, that they're going to be discussing is the fact that, hey, how can we enforce these rules that we set forth? And then obviously it looks like by injunctive actions, I'm saying they're going to perhaps come to some sort of conclusion or a halt to what they find. So they're going to say, hey, you guys need to stop with the shenanigans and put it all to an end right here, like right now. So that's good stuff. You guys should be excited for that. That's going to be some good news for us. Also, I'd like to bring up, so moving forward, I know a lot of you guys heard that they were going to be suspending quote unquote dark pools. I don't know how true that is, but what I do know is that they are suspending a lot of third-party data providers, right, that use dark fiber to connect to these third-party services. Now, I went ahead and looked up what dark fiber is. I'll read it for you, but a dark fiber is an unused optical fiber available for use in the fiber optic communication. Dark fiber originally referred to the potential network capacity of telecommunication infrastructure. Dark fiber may be leased from a network service provider. Because the marginal cost of installing additional fiber optic cables is very low, once a trench has been dug out or conduit laid, a great excess of fiber was installed in the U.S. during the telecom boom of the late 1990s and early 2000s. So what that's saying is, hey, when they were already building it, since they were already in there, they already had their hands in there, they were building trenches and shit like that, they went ahead and put a bunch of it in there just for later use, so they didn't have to go back in and use it, and have to do that, dig up the ground and do it later. So it says this excess capacity was later referred to as dark fiber following a .com crash of the early 2000s that briefly reduced demand for high-speed data transmission. So they had all of this, they built a crap ton of it. After the .com crash, it was like, okay, well now we have all these fiber connections underneath the ground. Like, what can we do with these? So these unused fiber optic cables later created a new market for unique private services that cannot be accommodated on traditional fiber cables, right? So basically what they're saying is now they're using those cables that they built in the ground for private services, which are these three basically third-party services that the SEC is basically suspending use to. So what can be done on those, why they need to be private, I'll leave that up to your imagination. But as of tomorrow, they're being suspended. And what's really unique about this is that they actually had a 14-day kind of lapse period. They were going to give them another time to go find different service providers, et cetera, because they're not going to be providing access to it anymore, right? They came back and said, actually, we're not giving you guys any time. It's suspended as of right now. And that came out, well, it's going to be published tomorrow. It's going to be in force tomorrow. So it kind of brings me to my next point. So that's a big deal, right? So none of this dark fiber, no dark pool shit, not going to be able to use it. It's suspended, and they're going to, have a meeting on whether it needs to be permanently suspended or how they're going to handle that. But that's, we'll cross that bridge when we come to it. So bringing me to my next point, tomorrow we are having liquidity tests. So the market is basically going to get put under a test to make sure that the positions that these hedge funds are taking, they have the means to cover them. And from my understanding of this document, and I'm not going to read the whole document, but just, and somebody could correct me if I'm wrong here, that they need to, if they, like, let's say they're over leveraged, right? They need more liquid than what they have because of the positions they hold. My understanding is they need to have that by the end of the business day, right? So that's important to remember. So that could, I'm going to bring all this together, right? But so understand that if they need to have the liquid, if they say, hey, no, you guys are way over leveraged, you guys need to have this liquid by the end of the day, that could cause some problems for these hedge funds, right? So tomorrow is the day that they're running these tests, basically no later than the 5th day prior to an options expiration, which is tomorrow. So we have that going for us, right? So tying all this together, stocks sink again on Wall Street as inflation worries mount. Inflation worries rattled Wall Street Wednesday, pulling the Dow Jones Industrial Average more than 680 points lower and placing the major stock indexes on track for their worst week in more than 6 months. The S&P 500 lost 89 points, or 2.1%. Its biggest one-day drop since last February. The Dow fell 681 points, or 2%, the worst decline for the blue chip index since late January. The NASDAQ gave up 357 points, or 2.7%. It was the tech heavies index largest pullback since mid-March. Inflation concerns have been hitting the stock market hard this week. The S&P 500, NASDAQ, and Dow are on track for their biggest weekly losses since October 30th. The Dow and S&P 500 had all-time highs just last Friday. So this article is kind of shaping this in one way, right? They're saying, hey, it's inflation. I'm sure that does have a little bit a part in it. But I think the inflation talk right now, outside of like us hitting our squeeze, I think that could be very real inflation. But right now, what they're specifically talking about, I think that it's just hard. Nobody has a crystal ball, and it's hard for some services to estimate what they're going to need to bounce back. So they, in my opinion, they could be hoarding a lot of these commodities, et cetera, because they're just trying to be prepared for the next, 6 months as the world comes back to normal. What I think this is, and I'm not a financial advisor or anything, but I think we're seeing major sell-offs in several positions of big companies preparing for these liquidity tests tomorrow. So making sure that they have basically what they need so they don't get margin called, because I assume that could happen too. Like if you don't have the liquidity to meet your needs tomorrow when they run these tests, you could be in a world of fucking trouble. So very, very interesting stuff. And to speak on that, I'm going to play this little video right here for you guys, because this was on the news this morning, and I thought it was pretty unique because they're already talking about it. It's like everybody kind of knows what's about to happen.
Weiss just told me to sell the industrials. You're telling me to look towards the industrials, right? He sells Boeing, he sells the XLI. It seems like the whole market has some sort of issue. So, look, the Dow's down 456. So, maybe today, yeah, go ahead.
Today it does. You're correct. And I think a lot of that is the expectation that there'll be margin calls this afternoon and that the selling pressure is going to accelerate. You're even seeing energy, which is pulling back right now. So that I agree with. I think that's temporary in its nature. I think over the next couple of days, that's something where you could see broad-based selling. But I think...
So, keyword, he said there could be margin calls this afternoon. Doesn't look like that's happened at this point, right? I haven't seen any news about that. Doesn't mean with all the evidence that I presented at the beginning of this video that it maybe is not happening tomorrow. Very interesting to think about, right? And I could see it happening with all these different tests that are going on, no access to these third-party data providers for these guys to kind of engage in some of this private shit that they've been doing. I think we're in good, solid territory, right? Just going over, if you guys want to take a look at some Fintel data, I could show you that really quick and briefly. Let's give this a quick refresh. We're looking at a short squeeze score of 84 out of a possible score of 100. So this has been fluctuating a whole lot. I would take this with a grain of salt, but it is looking good. It's actually dropped a little bit today, but I expect that that's just because there were some shares that were returned, not really indicative of anything that's going to be happening or affecting our squeeze. As of 5 hours ago, it's been a long update, 150,000 short shares available. And we're looking at a 75% short borrow fee rate, which is incredibly high. We're going to go ahead and compare this data to Stonko Tracker, right? Because these are actually, this is made by Ape, so we want to make sure we're giving them credit. So the numbers do match up. 150,000 shares to borrow, 75% short borrow fee rate, looking very nice there. So 35,000 calls are already, just under 36,000 calls are already in the money, coming up to May 14th for these call expirations. And then if we hit 11, there's another 45,000 that hit in the money as well. So that's something to look forward to. If we happen to get to 11, we're going to add a lot more pressure on these guys. AMC cost to borrow goes up again. So according to Ortex, now the cost to borrow is a little bit different than what you've seen here. And the reason why, because this is only being reported. So Stonko Tracker and Fintel, from my understanding, is only being reported from one exchange, one provider, whereas Ortex is getting it from all providers, which is why you see that cost of borrow a little bit different. But this, I tend to believe, is actually a little bit more accurate. 75%, 80%, even 100% seems low to me. 247% cost of borrow is the daily average today. It seems a lot more in line with what I think we should be seeing or where we're at. So that is good to know. Speaking of the options that we're talking about here in the money, something interesting we found on Yahoo today. Yahoo Finance, right? I'm just going to read this off, wrap it off for you. Investors in AMC Entertainment Holdings, AMC, need to pay close attention to the stock based on moves in the options market lately. That is because the June 18th, 2021 $40 call had some of the highest implied volatility of all equity options today. So that means that there was a lot of people jumping into these $40 calls. So I'm not saying go out and do that. I don't even know if I'm going to do that, but something to pay attention to. A lot of people are putting their money where their mouth is and banking that, June 18th, we're going to be around $40. So sentiment is there. We're looking very strong and bullish on that. Now, the next thing I want to show you guys, and I know I'm just kind of wrapping through information. I don't want to take up too much of your guys' time. I found this today on Reddit, and I don't know how true this is, right? There's a lot of information out there, and you got to take all of it with a grain of salt. And I've personally had to deal with that. I know people are skeptical. But again, I think it still shows sentiment. And I think that a lot of us are already at the point where we can kind of see what this guy's saying. But the idea of this, or what this guy is saying, is, hey, he's an ex-lawyer, okay, and he used to work on Wall Street. And one of his colleagues kind of gave him some information. He's an SEC lawyer and has been for years. So, this might be some reliable information. And he's basically saying it's bigger than what we even realize. He says there's an investigation into short position trading activity and its relation to clearing trades and market maker activity. He would not tell me the names of the firms that have opened up an investigation on because he can't, but it's safe to assume it's the usual suspects shorting AMC. So the people that we kind of already know got their hands in the cookie jar. He can tell us this, though. They're looking at more than fines. Wish I could share more, but the SEC isn't going to tip off anybody while they're investigating them, just as the FBI wouldn't. But he did say there's activity that he wouldn't even know about that is playing with the share price. This is why fellow apes are always asking how we could be red or have such low gains when we have 3-to-1 buys, etc. In essence, just hold. Again, he assured me this is serious, and there are other players who execute cleared trades who have been cooperating with the SEC. So these guys might be tired of it's probably because their business is getting messed with too. So it makes total sense. So assuming this is true, this is coming from a lawyer that works for the SEC and that they're on the ball. We already knew that Gary, our knight in shining armor, is going to go to bat for us. So we're good there, but it's just good to see that that's happening. A lot of this information you can kind of see it's all kind of like cascading on each other right at the perfect time. So I expect that we're on the downhill stretch, guys, and I think we're going to get to where we need to be soon. And again, I say this all the time, just make sure you have outside of so much even an exit strategy, just don't be a lottery winner, right? Make sure that you guys have plans to make your money work for you, right? So we have what we covered today. So we know that the third-party data services are going to be cut off using dark fiber, which in a sense could be some of the dark pool stuff. I'm not 100% sure on that. Take that for what you will, but I think it will have an impact on what's going on. There was 5 million shares borrowed today and 129, or well, actually, let's come back to this and see and make sure. At a 247% cost to borrow. Pretty incredible. We've seen tons of market sell-offs today, in my opinion, because of what the Dow looked like, the S&P, the NASDAQ, everything was red except our champion, AMC. And we're looking strong, right? So heading into tomorrow, remember we have the Sunshine Act closed door meeting with the SEC, and we have liquidity tests. So be prepared for a big day. And then Monday, we're looking at a battle for 1101, depending on what happens tomorrow. Obviously, we want to hit $11. We can throw all those calls in the money as well and really put the pressure on. I wanted to show you guys now real quick to take it down from a little bit less serious note. I'll show you some of the stuff that's going on right now in the markets, in terms of, not in the markets, but in our community, right? Everybody, there's been a lot of people that have been putting their money to work for us guys and putting flyers and banners, Las Vegas billboards. They're doing, like I said, airplanes and flying around Citadel. And this one happened today, I believe, in Toronto. So I'm not going to play all of it, but we'll play a little bit of it. Flying right around, right around Toronto. So looking very beautiful and strong. And I know this is going to spread awareness. I mean, I seen it on somebody's Instagram. That's a personal friend of mine that not even involved in stocks. I happened to see the one in LA and posted a picture. So I know it's definitely getting the word out. So that should make you guys excited. We got people dressing up. Cat Striker here, dressing up as an ape, getting her nanners, getting ready for the squeeze of a lifetime, guys. And then obviously AMC Theaters representing our attendees in full force. We're looking golden. Guys, again, thank you so much for all the love on the videos, right? I'm still new to doing this. I'm still nervous on being in front of the camera. I'm sure you guys can see that, but I'm trying my best to give you guys data as soon as I get it, and give you, my take on somebody who's learning as I go. And I appreciate you guys all watching, and I hope to see you guys in some of my live streams that I do in the future. If you guys enjoy the comment, it means so much to me if you like and subscribe. And obviously, I'll be in touch with you guys tomorrow, and we'll recap kind of on what we touched on today and see if it had an impact on the markets. I appreciate you guys. Love you long time. Peace.